Good morning, everybody. Last day of the trading month, end of the week, end of the month, second month of this quarter with the big end of the week, end of the month, end of the quarter trading day coming at the end of June. We rolled to September this morning. The market is behaving as you would expect it to on the roll. We are looking at yesterday's close. We closed around 128. We're at 127.14. So the normally we'd look for a spread between the two contracts of about 32 to 34 ticks, but it's tighter than that, reflecting steady interest rates. Not much of a change. So the market is acting differently than what the current Fed statements are about raising interest rates this year. No major news out last night. The big news out of Asia was China's market opened lower and was going for the 10% correction, then it came roaring back. The news out of Europe, no new news out on Greece. Greece is now expected to default next Friday. We'll see if that actually happens. The closer we get to that deadline and to that default, on the previous one, the IMF just let them roll over. Take money from the IMF, immediately turn it back to them. There are pensions, etc. to be met. So Greece, the Greek government that ran on anti-austerity policies is between the rock and the hard place. And my guess is because they're desperate for money, they will blink first, but we'll have to see if that happens. Longer term, they probably are headed out of the EU. I think Northern Europe is tired of screwing with them. They got a poor attitude, if you know what I mean. So right here, we've got first resistance is going to be in the 16 to 20 area, and so our first trade is going to be, and it's just where resistance is 15 to 19. And second is going to be 23 to 27, closing the gap up here with yesterday's low. I don't know if we can get there without some help from the news. On the buy side, we're going to try to buy 1 to 5. And then 25 to 29. We will adjust this after the news. The GDP number is important. They're expecting first revision GDP -0.8. San Francisco Fed has already said that we should have seasonal smoothing so we don't get a number like this that is out of place. Chicago PMI is higher than last month, and still above 50, so we can still make claims that we're having industrial growth. The Chicago PMI is really the health of the automobile industry. And the Michigan consumer sentiment is up from last month at 90.3, and that usually is pretty good reflection on where the stock market is. So the first news focus will be GDP, and a bad number is built in. The E-minis reaction to that is probably primal or key to what happens, and bad news is good news is bad news. So if it comes in at -0.8 or even lower, I would expect the stock market to initially react lower, but then come back because the Fed can't raise interest rates anytime soon. Chicago PMI will be the second. The market will move to that. Then Michigan consumer sentiment at 90.3. The 15 to 19 sell is pretty aggressive, but that's where resistance is. And I mean, there's no magic in it where the numbers came from. It's just that's resistance. And you have to adopt the exchange members mindset. This is support, this is resistance. I'm going to lean against it. If I'm wrong, I lose 2 to 3 ticks. And that's just exactly the way they think, and that's the type of thinking that we have to develop to be successful playing this game over time. The rains have continued. In Wichita, we got another big storm system rolled through last night. We don't have the flooding problems that they do farther south. I saw big storms in Texas yesterday. It'd be nice if that stopped. Okay, resistance go back and look at this area right in here. That was pretty strong support. It will be resistance, but over a week, the September contract will try to trade back to June prices. So there's going to be an upward bias because of the roll. And then we have this morning's news to get through. So right here we got this double print at E. We got this double print at 12. So 11 to 15 is sell 1. And then we've got all this volume up at 27, 28. We'll make 23, 27 sell 2. And the idea that we'll play for a pause day after this week's auction with some convergence. On the buy side, the last rotate down stopped at 28, 29. We've got this split right here at 27. We're at 07, so 25, 29, buy 1. I think if we crack that, we're headed lower, so we'll make 13 to 9, buy 2. Now, if the GDP number doesn't come in at minus 0.8, it comes in like at minus a half, minus 0.4, then the economy is stronger than currently thought, and the Fed can raise interest rates sooner rather than later, and that's got a chance of taking both financials and the E-mini lower. Okay, we're in the August contract in gold. Some people just go right to December after the June contract. That's up to you, but the open interest and the trading volume should be in the August contract. And here we sit, August contract. That's where the roll is. So we're in, like we were yesterday, 90, 92. Sell 1. 95, 97. Sell 2. On the buy side, we can trade a little lower. We're going to make 83, 85. Stops below 85, buy 1. And then we'll make 78, 80 for buy 2. We'll kick up the buy side just a little bit. And Greece news is lacking, so nothing to drive that. Out of Europe, and Europe is where the gold market starts. China would like to have it start in Hong Kong or Shanghai, and that is the second biggest market. But they don't usually have the impact, and you can see that by A period. They aren't taking the bull by the horns and creating a market and setting the direction like London will do. Okay, no news to drive the Greek trading. No Greek news to drive the trading in the euro. So we're in a trading range right now. This contract will roll the Monday before expiration, so we got a couple more weeks to trade this. Got a seller at 109 as we suspected, and we have a buyer in the 109 and a quarter area, and we're currently at 72. We're dealing with a P, and because of the forecast of minus 0.8% growth for GDP, this number, this contract will swing on that number if it comes in lower than 0.8. The 0.8 is already built into the structure. It should rally if it comes in less than minus 0.8. It should trade lower. So right now resistance is at 110. So 90 to 110 is sell 1. 20 to 30 sell 2. On the buy side, 109.50 plus or minus. Then our 25 plus or minus for buy 2. And we'll have to adjust this after the news. Okay, the news this week, Iraq is raising their production 800,000 barrels per day. The infrastructure is being repaired and rebuilt, and they've got more production capacity. And ultimately, the battle in Iraq is between tribes and factions to control the oil. So if you're ISIS, you're not going to destroy the oil patch. If you're Shia, you're not going to destroy the oil patch, that infrastructure. If you're Sunni, you're definitely not. And that tends to add that tends to mean that they can produce what they want to, and they can up production, etc. Or in some parts of the world, etc. So basically, resistance is at 59. We've got stops here. We've rejected prices, so just like yesterday, 58.75, 59, sell 1. Then 59.50, 59.75, sell 2. I don't see us breaking out today. On the buy side, 57.50, 75. Let them get stops below. And then basically against 57 for buy 2. Okay, Rich Genders is going to be on today at 11:30 Eastern unless he notifies me differently, and he hasn't. Talking about how to trade crude. And for those of you that are time and capital challenged, you ought to really pay attention to this. It works. It's a very, very methodical, patient way to trade crude. It will put money into your account if you follow Rich's rules. And his group's rules. I haven't heard from Don Manning yet on what's going to happen with the bond group, but it will be formed and it will be informal. It's not going to be a formal room with somebody coming on and talking about it. I imagine it'll be done over a Skype room or something like that. Similar, and you guys can share your ideas. It should be synergistic. All should contribute. Don's got some great charts, some ideas on how to trade those. Tom will be a part of it. He's Mr. Retest Failure, disciplined that way, and so there'll be some good ideas in that room for you. And again, like I said, the E-mini, if it's ever allowed to sell, is going to become a really, really good market, especially to the short side, because it's holding in this area, not on fundamentals, either gold or crude, whichever one suits your fancy. And then I think the bond really warrants a very hard look. Okay, resistance is at 25. It's going to be down to the news, so 24, 26. We'll adjust after the news. It's expecting 0.8, minus 0.8, 29 to 31, sell 2. On the buy side, we've got our 10 to 12, which is pretty much where we were yesterday as the market idled, moved sideways. And this market with a P shape is expecting a number bigger than minus 0.8, so a minus 0.9. Minus 1%. And if the number comes in minus 0.9, minus 1%, your guess is as good as mine, but an initial reaction will be lower, and then it'll probably recover because the Fed can't raise interest rates sooner. They'll have to raise them later. And there's one, I don't know how to pronounce his name, Koshikara or Koshikara, saying no interest rates should not be raised until 2016. And I think the bond market says that's correct, the way everything is priced. And you have the others, Fisher and Yellen, talking about the market we need to raise interest rates this year, and the market's got enough slack in it that it can absorb that and do that. Okay, it'll take about 20 minutes to get everything up and posted. I am running behind, maybe even longer. Apologize for the inconvenience this morning, but every now and then that will happen. Be back with you as soon as possible.